Hey everybody, it's Pete. Good morning. It is Monday morning, February 1st, 2021, new month. Last month was amazing. Honestly, just really amazing. Hopefully you participated in the better part of the month actively. And then after the FOMC last week, we got a little bit choppy. The FOMC decision came out. We had a little bit of extra selling from some earnings. And then it was time to pull back and preserve precious capital. So hopefully you spotted what was going on. You listened to the videos during the morning and you recognize the fact that certain conditions are awesome and certain conditions are, you know what, let me go make another cup of coffee. If you have some questions about any of the stocks that we happen to talk about in these videos, definitely leave a comment below the video. I'll get back to you as soon as I can. And if you enjoy the videos and find value, please click down and subscribe and give us a thumbs up. I'd really appreciate that. That lets me know that I'm helping you, actually. So what we're going to do is we're going to head straight over into the charts. A little bit different day today. The futures have actually already turned around. They were a little bit ugly yesterday, Sunday afternoon, but again, I don't really trade off of pre-market activity. I wait until the morning, see kind of what the real levels are, and then I trade around them. So early, but a nice reversal in the S&P. So what we're looking for now, and this is very, very important, is are we looking at a short covering rally after the selling from Wednesday, Thursday, and Friday in the market, or are we seeing a reversal? Buyers step back in, like those prices, and now do we see some follow through? So the key for Monday and for the week, whether you're day trading or swing trading, is do we hold the bid? Holding the bid means we reversed, pushed, paused, and now we're looking to see if we stay there. So today's first half hour very well could set the tone for the entire day and even the week. It's that important. So let's head over to the charts. We'll take a look at some of the ideas. I am primarily going to be focusing on market leaders, industry groups this week. You get a little bit of selling like that, the market gets a little bit scared. So you want to go into what we might call quality. What's interesting is we're getting a lot of feedback about the electric vehicle stocks and specifically NIO and XPEV. And I want to point out on the charts why I haven't been trading them, why I have alerts set for those stocks as opposed to new buy stops or new orders to get into those trades. It's a very specific reason, and it's something you should really jot down, because when you get to the point where you were making money on a stock in November and December, for example, and now it's February, we tend to have in our mind that, oh, well, I made money then, so I just need to keep going back to that stock or that group of stocks because they were easier to trade. And I think the solar stocks and the tech stocks and the energy stocks, we keep rotating where the money is, where the smart money is. We just piggyback on them, right? You keep having in your mind, well, I made money on them last month, I must go back to them if I'm not trading well. But you need to recognize if those conditions are the same. And that's what separates a chart reader who's struggling from somebody who really gets to the other side and is patient and makes what they're supposed to when it's obvious. And if you want some help with this, definitely click down and learn about the boot camp. You get everything from me, my course, everything, including, but I think most importantly, you get access to my community and you get entries and exits and profit targets as well, which makes it really easier to learn while you're earning. So let's head on over to the charts. If you have questions about the boot camp, let me know as well. So we're going to start out looking at the market. And again, this is what we call a bullish U-turn, traded lower, reverse. And now we're looking to see, is it a short covering rally, or is this actually new buying, saying we got some good levels down there, let's stick it to them now and start to accumulate a new position. Again, I want to talk about NIO and I want to get into XPEV, and I think this can most clearly be seen on the weekly charts where we had some easier opportunities. We had news heading into NIO day this week here, and you can see we've actually had 3 weeks of selling or indecision. XPEV, very similar, where it has not been obvious. We've had 3 melted candles, which means indecision, 1 well-bid candlestick, and then a full week of selling. So what we need to recognize as traders is the reason it was obvious, the reason I made money, is it still valid right now? And we tend to have these fond memories of when we made money in a stock, when we had this easier to read price action, and we don't pay attention to the fact that the tape has changed. And that's easily one of the biggest differences between a chart reader and a trader, is they understand how to read the tape, understand when to pull back, like last Wednesday, Thursday, and Friday, and understand when to trade a little bit bigger. So if you're struggling, just really ask yourself, did I trade when it was obvious? That's a big thing, a really, really big thing. So we're going to start out talking about the AMC short squeeze. It seems to be in the news again today. Look, everybody knows there's a big list of these stocks. Everybody understands that the GME Game Stop story is probably the #1 story on Wall Street right now, overtaking all of the earnings and all of the other things that's going on right now. Whether you feel sorry for people that are on the wrong side of the trade, that's not the point here. The point is these stocks are active. These stocks are trading massive volume. Now the question is it for you? Should you be involved in these stocks that have the potential to be in play and dump really quickly or skyrocket really quickly? I personally think, again, I'm not anybody's advisor here or anything like that. I think you need to really look in the mirror and determine whether or not the volatility is something you can handle. And what I mean by that is, can you make fast decisions if the stock moves against you? Do you know exactly what time frame you're holding the trade? Are you holding it for an hour? Are you holding it for 20 minutes? Are you holding it to a profit target? Or are you buying it now because you think when COVID's over, it's going to be something great? Or are you participating in the short squeeze? And you need to be honest with yourself. Are you trading the short squeeze, or are you trading because you love the stock? There's a big difference between the two, okay? Here's the way I look at this right now, and what I walk everybody through, especially when we were trading GME before it exploded. I actually think it's easier to be day trading these stocks right now because, yes, the stocks could get halted, but any stock can get halted. It's easier to day trade these stocks right now because the risk is so well defined. You're looking at little intraday timeframes, little intraday pockets of opportunity where there's more money on the table and you could manage the downside in exchange for when it pops. So if a friend, maybe you, was asking me how you should be handling these stocks, I think personally how I'm doing it right now, and how I'm walking people through in the boot camp, we should be looking to actively day trade them. Again, me personally, I'm not telling you what to do. And that's how I'd be handling it, because I'm more focused on the downside than looking to buy. Think about everybody who had GameStop last week when the stock and bought it late and it was up at 475. I think it printed 513 pre-market. And then the next day, it was all the way down to, I think it was 120 or something along those lines, 115. So almost 485 to 113. That's why you really need to have discipline. That's why you need to really say, I know exactly what I'm doing and I can handle this risk in exchange for the potential. I can't tell you if it's right for you. You need to look in the mirror and say, can I make fast decisions? Am I okay with making fast decisions? Do I know my platform good enough to make fast orders? The answer comes back yes, and you have a strategy, then it might make sense to dip your toes in there. If you can't, if the answer comes back no, then it's probably not for you, and you could read about it in the news and you won't be part of the carnage of traders that don't have discipline that are trading it anyway. So getting back to what we're talking about with some market leaders, we're actually looking at some stocks that broke out, had a little bit of selling last week, stocks that have some room to go, stocks that hit new levels. WDC actually pulled back during the day, closed below the open with some selling, but I like the breakout. The breakout was on good volume. It came out of an optimal entry, cleared the $54 level. So I'm looking for a new entry anywhere above 54 for a new entry here. Abbott Labs actually, interestingly, had a really good trade out of a breakout out of the optimal entry. The challenge here now, and this is again very important, is it's past the optimal entry. It's probably 10% past the optimal entry. So this is a trade now for this week. It needs to go into the watch list, wait for it to pause, get another optimal entry, and then look for another one. And this part of game planning, this part of creating a watch list is massively important, because now you need to keep it. You need to cycle back to it. You need to wait for it to pull back. You need for it to maybe have one more day of trading where we're going to trade the bullish echo. But right now it's past the optimal entry and needs to go into your watch list for later in the week. But again, very important to have these on the list. NTAP is a stock that we called out last Wednesday. We love the breakout. Now it paused, pulled back, right back to the breakout level, closer to a spot we can manage risk a little bit better. I am looking for this over 68 today for a new swing trade. BNTX had a really good clean breakout yesterday with obvious room to go up to 132. We're looking for a new trade today out of the high of yesterday, with Friday's low being the stop loss, looking for 132 as the target. Again, you need to stick to your stops, respect risk. If the trade doesn't work out, no big deal. Again, sticking to the market leaders, sticking to the sector that has attention, sticking to the leaders that are trading very well right now. CGC happens to be one of them. You can see here on the chart, it blew through the optimal entry, had a really good run up for $8. So a little bit of indecision on Friday. We're expecting it to pause for a day or two. If we get some bullish day trades, that's fine, but I'm not looking to swing trade this now until it goes back just a little bit, maybe somewhere in the 38 area, I'm looking to get involved. Again, sticking with the sector leaders, I'm looking to be long and start a new swing trade in SPWR. Nautilus, interesting. I like this little breakout coming out of 3 days, almost 4 days of indecision. I don't like the fact that it got above 24 and failed, got above 24 and failed and came back. So as long as it's above 24, then we're going to look for it to make new highs. We're not looking for it to get to 28. We're looking for it to trade through 28. So 24 is the level. WORKHORSE is another one that got really good news last week, finally punched through the $30 level. Some profit taking, couldn't quite hold up there. I'm looking for a consolidation. I'm looking for where the stock is out of play for maybe a day and then gives us a new opportunity. I don't like when it goes up and fails, goes up and fails, goes up and fails. That means the buyers are unable to hold the bid. If we can finally hold the bid above 34 in that area, then we'll start looking for new entries. So getting a lot of comments about Facebook, which is having some really big negative news right now, especially on the advertising side and their advertising revenue. So I'm staying away from that as far as calling out buying opportunities. The tape is pretty bearish there. Microsoft, the other side of that. Microsoft had good earnings. Microsoft holding up there. And Apple, which actually had really good earnings, pulled back for a couple of days. So we're looking to start initiating a new position, looking for that 150 level that we had there last week on the trade that we took over 138. Remember, we got involved a little bit low 138. Said when it gets above and pauses above 138, then we're looking for the run up and hoping that the earnings were kind of like a new catalyst that punched us right up to the 150, and then we're looking to book profits. Didn't pull back a little bit, small profit, no big deal. You had a plan. That's all that matters, right? Doesn't matter what happens next. What matters is that you always know what you're going to do. We can't control the flow of the stock afterwards. The order flow is the order flow. It's our job to spot the order flow, place good trades that have profit potential with acceptable risk. They follow through, great. Put that in the ledger. If they don't, no big deal. Respect risk. Go to the next trade, right? If you have any questions about any of the stocks here, definitely leave a comment. I'd really appreciate it. And I'll get back to you as soon as I can. And just as importantly, if you find these videos helpful, click down and subscribe. You'll get alerts, and it would mean a lot to me because, again, I want to know that I'm helping you. And if I am, let's do more of that, right? Have a great day, everyone.